we figured that we would go bigger into multifamily deals that we could take more of a business leadership approach on, as opposed to just the day-to-day, nuts and bolts.
Yeah, it's interesting that you say that because this really is truly a relationship building business, and you need relationships on both sides. I mean, for me, I have not really raised capital to date. I've actually committed to two opportunities that are going to close by the end of this summer, where I'm going to have an LP position. But I have not raised capital to that extent. So you're right. An $18 million opportunity, you're probably looking to raise somewhere between $6.5, $7 million.
My girlfriend, I love her to death, a few weeks ago, she's like, "You don't have to go to the gym every day, baby." I'm like, "You don't want to see me on a day that I don't." Right? For me, it's something therapeutic, and it's something psychological. And there's plenty of times where I'm at the gym at 5:30 and I get an idea. I have a cup of coffee before I go to the gym, or some pre-workout. You get a little hopped up, the brain gets going, and in between bench press sets, you're sending off emails about a deal or something that you forgot to do, and you just it actually creates that little extra catch-up time, right? And I'm all about creating competitive advantage, and I think that we as people can create our own competitive advantage for our partners, our investors, or colleagues.
Welcome to the Healthy Investor Podcast with Bob Mastriani, where you and I will learn from successful real estate investors, entrepreneurs, and other highly driven individuals about their journey and the healthy habits and routines that play an integral part of their growth. All right, welcome back to the Healthy Investor Podcast. I'm your host, Bob Mastriani. I have with me today Matt Buchowski. Matt is a serial business builder, sales leader, and multifamily investor. He's built numerous sales organizations in finance and technology from the ground up. Originally, he was from New York, and he moved his family to Texas in 2014 via a relocation package from his then employer, which propelled his desire to build a venture in real estate. He began investing in real estate in 2016 and currently owns a portfolio of assets in both New York and Texas. Matt's the co-founder of Take Flight Properties, Take Flight Capital, and Deep Blue Capital. He's a lead sponsor and owner of assets in Arlington, Texas, and Jacksonville, Texas. Matt has extensive experience underwriting deals and creating value by optimizing underperforming assets. He's a member of the Jake and Gino multifamily investor community, which gives him a deep network of peers, investors, service providers, coaches, and resources that drive business growth for him and the investors he partners with. Matt went through a very significant personal change about 9 years ago that has propelled his growth personally, professionally, emotionally, and financially. And I can't wait to get into that portion of the business. But Matt, thanks so much for being here today.
Thanks, Bob. I appreciate you having me on. I'm really excited. You've had some really admirable people on the show before me, so I'm stepping into big shoes today.
So little fun fact about Matt that I actually just told my wife this a little earlier. Before I joined the Jake and Gino investment community, I actually went to Multifamily Mastery 4 and did the VIP experience, which included a dinner in the evening, and Matt and I sat next to each other. So really, he's actually the first person that I ever met in the community.
Wow. Okay, I didn't know that, but I remember that dinner. I think Gino actually sang some opera that night for us, and it was a great time. It was great to meet you, and I think I still have your business card from when you gave it to me that night. So
That's great.
That we kept in touch on in person and on social since then.
Yeah, now I have the QR code business card.
Love it.
So let's get into a little bit about your real estate investment business. Take Flight Properties, Take Flight Capital. If I recall, you were before you transitioned into real estate investing, you were doing some is it construction or contracting work?
No, I've been in technology sales leadership now since 2010. Prior to that, I was in financial services sales for 14, 15 years. But I made the leap into single family in 2016. I had a really good fishing buddy that taught me everything that he knew on a fishing trip. And at the end of the trip, he's like, if you're interested in in doing this, one of my brokers probably he called it stuff. He's like, Mark's got some stuff. So the next day Mark called me and he had a couple of listings and I bought it and I bought one of them and that's how it all began. It was an outcome of that fishing trip that I would have never expected and absolutely changed my life since then.
Wow. So that single family property, was that for buy and hold, fix and flip? What was the plan of that original one?
Yeah, it's buy and hold. I actually just sold it for like a 300% return. I'm all about buy and hold, Bob. I have a W-2. I have a big team. I have a W-2, and I have my kids half the time as a single dad. So I don't have the time for flips, right?
Yeah.
I think my partner Mike and I tried a couple of them, and between the sweat equity involved and driving back and forth and managing contractors and all that stuff, it wasn't for us. And we figured that we would go bigger into multifamily deals, that we could take more of a business leadership approach on, as opposed to just the day-to-day, nuts and bolts. And that's fared us very well. It was a tough decision to make because we had this visions of grandeur about building this great flipping business. But honestly, we flipped the switch, pardon the pun, into multifamily, and it's been, nothing but great since.
So my first investment ever was a fix and flip property. And by the time we sold it, I knew that I was more interested in buy and hold.
Yeah. Yeah. I know the feeling. So we actually did a flip in Mesquite, which is kind of a suburb east of Dallas for those that don't know. And it was a great property. We had a fantastic contractor. The place looked great when it was done. And then we had to have the city of Mesquite come out and do an inspection, and we failed the gas test.
Oh,
So the GC that we had never tested the gas line. And we had all these beautiful new cabinets put up and all kinds of stuff. And there was no way to access the gas line without taking all these cabinets down and opening up the walls. So we made this decision to go fix the gas line from the outside and break a hole in the brick wall and fix the gas line and then put the brick back up. And it was like a $3,000 or $4,000 project a few days before we wanted to list. And Mike and I just looked at each other and we were like, no more of this.
yeah. Well, after that first fix and flip, my next few opportunities were actually bar method. So, we bought them and still did rehab, still did work. But then at the end, I just feel like the stronger payoff for me was to keep those properties. I mean, here I am, the first buy and hold burr method property that I purchased was in 2010. It's 13 years later. We still have it. It's cash flowing. Equity has increased, and I just feel more comfortable in that. As a matter of fact, we're thinking about potentially selling that to move it to larger multifamily because that's a 3-unit. But yeah, I fell right into multifamily, and long-term holding just seemed to have a better resonation with me.
Totally. I think it's good to, I'm playing the long game with regards to real estate and multifamily. And, I think there's something great about just watching the portfolio grow. I think I was listening to Bigger Pockets or another podcast once about a guy that was doing flipping full time. And it just seemed like constantly transacting, right? You're either buying or fixing or selling. And, again, it's for a guy that's got a W-2, and I just don't have that kind of time. And to me, focusing on one larger deal and doing, 1, 2, 4 of them a year was just way more digestible and working into the life that I want to live than just, buying a deal a month and doing the burr method, or buying a deal a month and flipping and getting out.
Yeah. Also, that short-term capital gain was not fun to deal with. The tax write-offs of buy and hold are significantly better.
I completely agree with you. We learned that lesson the hard way a couple of times too.
Yeah. So what does your business currently look like today? You have some properties. Where are they located? What does that look like?
Yeah, we're heavily focused in Arlington. So we have 4 complexes in Arlington. We have 1 in Jacksonville, Texas. We have 1 in Waco. And then we have a small portfolio of single families in Richardson and Garland.
Okay.
We love Arlington. I don't know if a lot of people know this, but Arlington's like the 4th largest city in Texas. And with all the economic development going on out there between AT&T Stadium and the new Ranger Stadium and new hotels and and just, they got Texas Live now, which is kind of this entertainment venue between the two stadiums. There's just so much money pouring in that we think it's a great place to invest. And we've had properties there since 2017, and they continue to perform very well. There's definitely some older vintages in the area, but they're overall in very good shape. And there's definitely a lot of new townhouses and some new multifamily stuff that's being built out there.
What are the requirements now for what you're looking for? What type of properties are you searching for?
Yeah. We'll look down into the 20s and 30 unit type properties. We can bang those out pretty easy. The two deals that we've done so far this year were 24 units. We're really focused now on 50 units and up, and into the 100 unit arena. So we have an LOI out on 120 units in Arlington. We're working on underwriting another 120 unit deal in Central Texas, and then I got a call today about another 115 unit in Arlington. So we've gotten more confident in where the economy and where the economy is and where it's headed in the course of the last couple of months. And if you had asked me that same question 6 months ago, I probably would have told you we're sticking in the 20 to 30 unit range.
Mm-hmm.
But things have stabilized enough to the point where we're really wanting to take down some 100+ unit deals before the end of the year.
That's great. That's great. It is a bit of a leap. And, the more I talk to investors who move into multifamily, it seems like there are these buckets, right? So the first is like, the 5 through 15 unit range, which has a certain comfort level. And then, 20 to 50 seems to be the next bucket. And then, it seems like you did a couple in that range, and now you're in what is the next range, which is basically 50, almost to infinity, right? So is it 115 units, or is it 72 units, or is it 85 units or something like that?
Absolutely. Absolutely. And we actually underwrote a deal a couple of weeks ago. It was a 200 something unit deal right here in McKinney. It would have been great to have a cornerstone property a few miles from the house, but that was like a $60 million transaction. And I know that we kind of pulled back on that because we wouldn't spend a whole lot of time on something that we just knew we couldn't do.
Mm-hmm.
Right. And when you're talking about competing with institutions, and you're talking about working with an entirely different class of brokers in that end of the market, you want to have confidence that you can execute. Right. I'm very confident in our ability to raise $3, $4, $5, $6, $7 million, not so much $20 or $25 million.
Mm-hmm.
Right. And that's an important thing to keep in mind. Like I had a conversation with an investor 4 or 5 months ago, and they were looking at an $18 million deal as their first deal. And we went through the underwriting, and at the end I said, tell me about your investor list. And they're like, well, we know these 3 people that have money. And what else? And I think it was kind of a moment of understanding for them, because you're competing with people that know what they're doing, and the broker is going to look for surety of close.
Yeah.
So do you want to spend your time falling in love with a deal and the underwriting and the due diligence, and then not be able to raise and get that egg on your face? Or do you want to be confident and step into a deal, nail it from a returns and execution perspective, and then everybody has a good taste in their mouth about what you're capable of and believes in you going forward? And that's one of the things that we've done. We've never signed an LOI. We've never signed a PSA that we didn't close on. And that gets around quickly in the broker space. And the wholesaler space. And I think that just really boils down to knowing the size deal that you can take down, how much money you can raise, and where you can execute.
Yeah, it's interesting that you say that, because this really is truly a relationship building business, and you need relationships on both sides. I mean, for me, I have not really raised capital to date. I've actually committed to 2 opportunities that are going to close by the end of this summer, where I'm going to have an LP position. But I have not raised capital to that extent. So you're right. An $18 million opportunity, you're probably looking to raise somewhere between $6.5, $7 million. What do they say? What do they say? Raise twice as much, because about half of it's going to fall off by the time you get to closing.
That's exactly right. That's exactly right. And if you take your average allocation of, $50 to $100,000 per investor, you can think about how much pipeline that you need from a capital attraction perspective. And I think one of the things that works for me from a investing perspective is all my sales leadership experience, right? So
Mm.
I can tell you that if I need to hit a $4 million quota for one of my teams at the office, at my day job, that I need somewhere between 10 and $11 million worth of pipeline, and I know the product mix, and I know how that pipeline gets distributed across my AEs based on title and seniority and all that sort of stuff. And I take that kind of mental vision and apply it to capital raising and the deal funnel. And I think when you think about everything as a funnel, I think Brandon Turner talks a lot of everything being a funnel, and you couldn't be more right. You got to have the deals, you got your deal funnel going all the time, and you've got to have your investor funnel going all the time. And it's difficult to balance both those things, but the people that are super effective in this business do just that.
Yeah. Is that something that you and your partner split evenly, or do you each have defined roles of where you feel more comfortable?
Yeah, good question. So I tend to take lead on the broker relationship and underwriting.
Okay.
I find that I need those two things just based on my personality type, right? And I need to be involved in the underwriting to feel really comfortable about the deal. I've had deals sent to me where somebody else did the underwriting, or you look at the broker's OM, and I throw both out the window and I start from scratch. Like I just need to know all the decimal points and the figures. My partner Mike, he's great from a QA and legal and finance and kind of some of the more detailed things,
Mm-hmm.
right? And my partner Chris, he's great on the asset management side, and my partner Brian, he's great from a systems perspective, and our partner Nick is really good from a social media outreach and capital raising perspective. I think when you're starting in this business and building out a team, or sometimes teams, right? You've got to know what you're strong at and what other people are strong at, and complement each other so that together you can win. If you have three different people that are all focused on underwriting, and nobody's thinking about capital raising, and nobody knows how to talk to an attorney, and nobody knows how to talk to your accountants and cost seg and all that sort of stuff, you're never really going to get the deal off the ground, right?
Yeah.
So I have two different sets of partners, right? I have Take Flight and Deep Blue, and there's some reasons for that, but there's also kind of a risk tolerance perspective that you need to talk about, where who's willing to take different kinds of deals. Me, I tend to have a broader risk tolerance, where I'll think about multifamily, I'll think about student, I'll think about B and C class, and there's some of my partners, they like multifamily and not student. Well, I don't want to not do a deal because I didn't surround myself with the right people, right? I'm a loyal guy. I'm fully disclosed about what I do and who I do it with when I take deals to people. But I think that's important too, right? Know your part, just like your investors' risk criteria and your investors' return criteria. You've got to know the people that you surround yourself with. What are they good at? And what do they want to partner with you on? So you're not trying to jam a circle into a square peg into a round hole.
Yeah, no, that's great. And you and I spoke right before we jumped on here. We were talking about delegating responsibilities. To some extent, we talked a little bit about VAs and hiring off some of those responsibilities. And I think it really comes down to exactly what you were just saying there, right? Knowing what each person's highest and best use is, where do they excel, and then finding someone else who excels at the things that maybe you don't excel at, or finding someone else who has a stronger ability to complete those tasks to allow you to live in your highest and best, right?
You're absolutely right with that. And I read Who Not How recently, and it was really impactful. It's one of those things where you kind of know it in your head, but too proud to realize it, or you're just kind of territorial, or you bad at delegating or whatever. But that book was eye-opening for me, and I realized how many things I was doing that I could just ask someone else to do or hire someone else to do. So, to your point, I just hired my first VA this week, and I'm looking forward to her picking up some mojo on social media campaigns and some other things that we've tasked her to do. But I'm already thinking like, okay, now that's off my plate. Now I just have to manage her, right? And I can go figure out what else she can start to do for us, and I can either pay her more hours or go find someone else to take over some other responsibilities. So I realized that me sending out, LinkedIn invites, to your point, was not the highest, best use of time, but I need to do it,
Right.
right?
Needs to be
And
done. Yeah.
it's a tough thing to swallow, but you got to do it if you want to scale.
Yeah. Cool. So I want to transition over to this is the Healthy Investor Podcast, and I love to talk to entrepreneurs, investors like yourself about healthy habits and routines. And even in your bio, you mentioned that you went through a significant personal change around 9 years ago, had to do with some personal growth. So would you mind talking a little bit about that? What does that look like for you? What your habits and routines all look like today?
Yeah, absolutely. So I took advantage of a relocation package from my employer back in 2014. And, they say everything is bigger in Texas, and you don't realize that until you move here and you realize we're talking about food too. So my first like 2 or 3 months of moving here, we had, Babe's Fried Chicken House a few times and all the great barbecue spots, and there's just heaping piles of food. And a few months after moving here, my staircase to go upstairs and put the kids to bed is 3 flights. And I would get upstairs and I was just huffing and puffing. And in the morning, I would bend over to put my shoes on, and I felt like a bowling ball was in my lap. And I was like over 300 pounds. And literally, I started to have really bad dreams about getting diagnosed with diseases and stuff. And I'm like, I got to change something. So I downloaded MyFitnessPal and I started to log what I ate, and I joined the gym that's a mile from my house. It's nothing fancy, but it was just super close and convenient because I wanted to like take all the possible excuses off the table. And I cut out drinking. I cut out bread. I logged all my calories. I went to the gym 4 to 5 days a week religiously. And over the course of the year, I lost 100 pounds.
Wow.
And I went from a triple X shirt to a large. I went from size 44 pants to a 34. And, I definitely sway up and down 10 or 15 points from time to time. But I've kept it all off. And what I realized is that once I lost all that weight and implemented all these habits and cut out the gluten and the drinking, which made me sluggish, right? And drinking makes you do bad decisions, and the extra dessert at the end of the night before you go to bed, which isn't good for your diet and all your sugar levels and all that sort of stuff. I just had all this energy. And as I found all this energy, I wanted to kind of, not just embrace it, but figure out what else I was capable of. So I started to listen. I changed from listening to music at the gym to listening to podcasts, and I would listen to Tim Ferriss and Lewis Howes, and I started to listen to Bigger Pockets, and that's where I first listened to Jake and Gino in their first Bigger Pockets episode back in 2015 or 2016. And then I'm like, okay, so now I'm also this way. I have all this energy. I'm listening to all this motivational stuff. But motivation, you can't deposit motivation in a bank. So I was like, how do I monetize this? Or how do I take real advantages other than feeling really good about everything that I was doing? And I'm like, let's start learning some practical skills. So hence the fishing trip of 2015 or 2016 with my buddy Pete, who's up in New York and, is a great mentor to me still to this day. And he taught me what he knew, and I just took action. So it was the personal change, losing the weight, coming up with the disciplines around diet and workout. I also did meditation for a long time. At one point, I had meditated for 400 consecutive days. And all those little things put you in the headspace and give you the physical and mental energy to go do other things.
I love that, and congratulations on taking those steps and sticking with it too. 9 years later, for those who are watching on YouTube, you could see that Matt's in good shape, and he's got high positive energy, and that's all part of it, right? And it's interesting, and we spoke a little bit about some activities that you're involved in, right? You're doing some like races and Spartan races and those kind of things, and there are people that look at exercise almost as like a punishment. And someone not too long ago, I heard someone say that it's more of an example of what your body can do, is a way of showing off what your body can do, and challenging yourself to do even more and to be even better at it. And sort of, I know for me, it's the mindset of, I was someone who up until about 40 years old, exercise was not a part of my life. And now that it is, it's just like, it's not just about that. It's also about, my morning routine, my meditation, my exercise. It's also sets the rudder for the day. It's like sets my day in place. It sets my energy level. It sets my, my focus on what am I going to focus on today, and what am I going to try and achieve today. And it's also really nice that by like 7 a.m., 7:30 a.m., I already have a win.
That's right.
Right.
That's right. Yeah. Yeah.
So,
I completely agree with that. And yeah, I think there's a lot to be said for the discipline around getting up early and the discipline of going to the gym. My girlfriend, I love her to death, a few weeks ago, she's like, you don't have to go to the gym every day, baby. I'm like, you don't want to see me on a day that I don't. Right? For me, it's something therapeutic, and it's something psychological. And there's plenty of times where I'm at the gym at 5:30 and I get an idea. I have a cup of coffee before I go to the gym, or some pre-workout. You get a little hopped up, the brain gets going, and in between bench press sets, you're sending off emails about a deal or something that you forgot to do, and you just it actually creates that little extra catch-up time, right? And I'm all about creating competitive advantage, and I think that we as people can create our own competitive advantage for our partners, our investors, or colleagues by creating extra time in the day and having the ground to needed to do what you have to do, or the time that you need to do what it takes to get it done. And the people that don't make it to the gym in the morning, or stay in front of the TV late at night, like, that's their choice. That's fine. It's just not for me. And I think these habits and disciplines have fared me very, very well. And then you mentioned before, like, some other things. I see a bunch of race medals there for you. In 2015, I did my first Spartan race, one of these obstacle course races, and man, I fell in love with that whole concept, right? I think Joe DeSena has done a phenomenal job building Spartan as a company. They have an amazing culture, and a couple of times a year I get out there just by myself on a race course, and then I just say to myself, like, am I going to beat my last time? Right? I don't care who else is on the field. I just want to beat myself.
Yeah.
When you take that kind of that outlook on things, it's a game changer, because you're always trying to, you're competing against yourself. And I think that's really the most important competition that you have. If you don't know what you're capable of, if you don't test yourself, you'll never know what you're capable of, and you'll never really achieve your true potential.
Yeah, that's awesome. Awesome. So I want to transition over to the final segment where I ask the same three questions of every one of my guests. Sure. So for you, Matt, what is your definition of success?
My definition of success is, I think there's two of them actually, right? Number one is, I think a lot of people have heard this before, being able to do what I want, when I want, where I want, with who I want, right? The other thing is winning with fulfillment, right? I think both of those things are very near and dear to my heart. And when I say winning with fulfillment, right, there's plenty of people out there that make tons and tons of money, but they're miserable. Or they make a lot of money and their home falls apart. Their kids hate them, or their significant other hates them, or they get divorced multiple times, or whatever. And I think you can't win at all costs, in my opinion, right? You got to win with fulfillment, have a good home life, win at work, win in investing, have a family that loves you, have great relationships, and give back from a philanthropic perspective. So I think those are the two things I would answer that question with.
That's great. For question number 2, for someone who's newer to investing or even learning to focus on their goals or their path to success, do you have a good book recommendation for them?
I have a ton of great book recommendations. I can't say that anyone is specific to investing, but I'll give you a great leadership book, and then I'll give you 2 great leadership books. Number 1 was 11 Rings by Phil Jackson. Absolutely fantastic book. I flew through that book, and I still think it's one of the best leadership books I've ever read. He talks about managing egos, and he coached both Michael and Kobe in the course of his 11 championships, and that was no easy task. And some just really unconventional things he did from a coaching perspective that I use in my coaching today. And then the second one, this book was great and really resonated with me. It's called Winner's Dream by Bill McDermott. Bill McDermott was the co-CEO of SAP. He started out like selling copiers and working in delis as a kid. He's from Long Island, so it really his story really resonated with me. And he just always asked for more, delivered more, and asked for more in his job, and ultimately came up to be the co-CEO of SAP. And he's now the CEO of ServiceNow, one of the most admirable technology companies of the last 10 or 15 years. And that company's just been on a tear. So I would say anybody that's interested in leadership and practical principles and great stories that you can apply to your business, those are 2 books that I would recommend.
Awesome. So before we jump on to the final question, first I want to thank you for coming on. I really appreciate you taking the time out to share your story and where you're going with your journey. How can we support you, and how can people reach out to you and connect with you?
So you can find me on Facebook, you can find me on LinkedIn, you can find me on Instagram. I'm all over the place. I probably don't post as much as I should, but I'm definitely out there pretty frequently. The way people can support me is find some of our content. We have a podcast called the More Doors Podcast. Listen to it, subscribe, give us some comments, give me some feedback, either publicly or privately. That's fine. But I think the thing that I really get a lot of energy from is watching other people win without ego, right? I think, and that's one of the things that Jake and Gino do really well, is they promote, winning without the ego. Nobody wants to see the Lambos and the McLarens and stuff, but when I see people post a story about a deal that they won and overcame some challenges or raised money for the first time, like, let's celebrate those wins. This is a small community of people that are trying to stretch their comfort zones and do things that we didn't really think were possible up until the advent of all these kind of coaching programs over the last 8 or 10 years. And watching people win gives me a lot of energy. So keep doing that.
That's great. And you said it was the More Doors podcast, right?
More Doors. That's right.
Excellent. Excellent. So final question for you. If you can think back with me to a young Matt around the ages 10 to 12 years old, knowing what you've learned so far in your journey, what are 3 pieces of advice that you would give to that young Matt or to any preteen child to help guide them towards success?
Yeah, it's going to be tough. Don't give up. Number 1. Number 2, never stop learning, right? When the school bell closes or the school bell rings at 3:00, or you go home for the summertime, don't disconnect from learning. That there's so many different learning mechanisms out there now. They're much, much different than 30 years ago when I was in the age bracket that you asked about. Just consume content and apply it. And then lastly is don't get caught up in the hype of being one of the cool kids, right? Define your cool and stick with it, right? I was pretty poor when I grew up, and I didn't have some of the flashy clothes that kids were wearing until I got my own job, right? I let it affect me for a long time, and it made me feel bad about myself. But go out, be an individual, right? Embrace the culture, but be an individual, and care less about what other people think and more about how you feel about yourself.
I love it, especially that third one. as you know, I have a daughter who's 12 years old, and one of the things we discuss from time to time is that I give her a lot of credit because she seems to know who she is. She knows who her people are that she wants to be around. And I just think it takes so much courage and strength internally to focus on that type of energy and to just be who you are. And it's okay to be who you are no matter what. So
yeah.
Awesome.
And just kind of a quick message to all the parents of 10 or 12-year-olds that might be listening to the show, or any 10 or 12-year-olds that might be listening, right? Life is not digital, right? There's a proliferation of devices out there, and everything seems to be going digital except life, right? Get outside, go do something, let your kids scrape their knees, let your kids fall off their bike, let your kids do physical stuff. If you expose them to physical things and physical activities now, it'll follow them through life. Like, I was a Boy Scout, and I broke my arm a couple times. I broke my fingers multiple times playing basketball and all kinds of other stuff back in the day. I wouldn't trade those memories or those experiences for anything. And I just think that we've got to get the kids off the couch. We've got to get the kids off the devices. And we've got to get them out into society and kind of experiencing some of the things that made us who we are today.
I agree. Awesome. Well, thanks again for coming on today, Matt. I really appreciate it. And make sure you check him out, Matt Buchowski, the More Doors podcast. Go out there and make it a great day. Thanks so much for joining me on the Healthy Investor Podcast. Check out the show notes for more information about connecting with our guest. If you enjoyed what you heard today, please head on over to iTunes and leave a positive rating and review. It would mean the world to me. I'm grateful for your support, and I wish you an abundance of success on your journey to healthy investments and a healthy life.